Another exciting episode here on the Professional Edge. My name's Todd, tax attorney, CPA, and certified financial planner. What we're talking about is what's the plan? What's your tax plan? We talked about converting a hobby into a business. That way you can deduct those losses on your personal tax return, because if it's considered a hobby, then those losses are suspended. We cannot use those to offset your other income. So that right there is one tax strategy. The other one we talked about was, what is your Roth conversion strategy? Yes, we need to make sure you stay in the right marginal tax bracket. May make sense to convert a whole bunch this year, or it may make sense to just postpone the Roth conversion. Just depends on your individual situation. The other thing is, what's your plan? What is your tax plan on your farm? Have you thought about having a farm? Well, there are tax benefits to having a farm. And with that, you can deduct, let's say, a tractor. You can deduct a lawnmower if it's used in the farming operation. And it does not have to generate a net income each and every year. We just need to recognize the valid farm expenses and recognize the farm income. So with that in mind, if you've been thinking about, hey, retire and get out of Metro Atlanta, or you're listening to the Professional Edge podcast somewhere and you do operate a facility that could be treated as a farm, you raise vegetables, let's say, or you have chickens and you sell eggs, then that could be considered a farming operation, and therefore the feed, the chicken, the livestock, all those things are deductible expenses. So if you want to start that conversation, the number for EMC is 404-250-9798. That number again, 404-250-9798. All right, so we just got done with tax season. What's the other plan for your taxes? How do we reduce or minimize our taxable income? Number one, if we can defer the recognition of income, that's base principle number one. How can we defer the recognition of income? Well, we got to make sure that we are fully contributing to our 401k. It's amazing to me how many individuals that are W-2 employees, there's not a lot of tax strategies that they can do, but they are participating in the 401k at their employer, but they're only participating, let's say 3, 4, 5% because, quote, they need the money to be taken home, but they complain about how much taxes they're paying. Well, fundamental principle is you got to pay yourself first, and that is maximizing your 401k. And sort of the concept is we want to definitely participate in the 401k up to the amount of the employer match. So if the employer is going to match 5%, then we definitely want to have our clients participate in the 401k up to the 5% to get the full company match. Then the strategy is the second dollar that you make after that is you need to contribute to your Roth IRA. Now, you may be a high income earner. Well, we do a non-deductible IRA and then convert that, so the backdoor Roth. And then if we have some additional dollars to save, we go back to the 401k and add that to the contribution. That's the ultimate or the most efficient tax planning strategy, and that coordinates with your retirement planning. That is the essential way to do things. So again, get the company match in the 401k, step out, get your Roth fully funded, step back into the 401k. So that would be the effective tax strategy for a person with a W-2. Now, what about tax planning when it comes to houses? Well, we all know that you can buy a house and live in it, and therefore your personal expenses, such as your insurance, your real estate taxes, those are deductible, but your maintenance repairs are not deductible on your personal residence. But if we have that residence and we have a rental property, those expenses of repairs, maintenance, those are going to be deductible. Or if you have your place down on the panhandle, a condo, and you start renting it, well, now that next what is the plan? If we're going to convert this into a rental property, then the very first thing that scares me as an attorney is the worst case scenario, somebody gets hurt. As we've talked about it on the professional edge before, well, we definitely want to put a liability fence around that rental property, and therefore, if something tragic happens when somebody is renting that property, then you reduce your exposure to your other assets outside of that rental property. So we try and limit your personal liability. So once you convert that condo into a rental property, well, now we got to start keeping track of your rental income and your rental expenses. That HOA fee that you were paying when you were not renting the condo was not deductible, but now it's considered a rental property, and therefore the HOA fee is going to be a deductible expense to offset your rental income. And you say, hey, I'm going to probably have more expenses than my rent. And I'll say, hey, you know what? If you're under a certain adjusted gross income level, we all know, or we should know, that rental activity is deemed a passive activity in the eyes of the IRS, but there's an exception for individuals under a certain threshold of adjusted gross income. We can actually deduct up to $25,000 of those rental real estate losses against our active income. So let's say you have a W-2 of $80,000 and you have a $15,000 real estate loss, and we got to count in depreciation with that. So that's what's generating that $15,000 loss. Well, guess what? Quick math. W-2 is $80,000 minus the 15. We're only going to pay, or we have an adjusted gross income down to $65,000. That's pretty awesome. So again, if you're thinking about converting that condo into a rental property, we can actually deduct those losses if we are doing our right tax planning. So again, to start that conversation with a tax attorney, a CPA, that would be with estate management counselors. Guess what? That phone number is 404-250-9798. That number again, 404-250-9798. And let's say another tax plan. What is your plan? Well, I want to start a business. Well, all right, let's structure it. Are we going to be just a sole proprietor? I don't think so, because as a sole proprietor, you have unlimited personal liability. So if you do something wrong, then your personal assets are exposed. So let's at least generate an entity. It could be an LLC. It could be an S Corp. With that, then we're going to have limited personal liability. That's the first key point that I counsel my clients on. If you're going to start a business, let's do it right from the very beginning. Again, let's establish a foundation for what you're going to do. So take it serious and get your entity in force and effect and make it correct. Now, I will say that I have seen individuals start a company, and I'm involved about 7 to 8 years later, and lo and behold, the client says, yeah, I got an LLC. And I'm like, all right, let's see the articles of organization. They show me those. And I'm like, all right, who's the owner? Well, it's my brother and I. Okay. How's it divided? Oh, it's 50-50. I'm like, okay, let me see the membership certificates. And they just look at me like deer in the headlights, because they don't have membership certificates. They never went through that step and issued those away from the entity itself. So I'm not sure you're a valid LLC. If you're asking for liability protection, then you probably need to operate yourself as a valid LLC, and those membership certificates are still held in the LLC itself. They aren't out to the members. So I'm not sure it's properly organized. That would be at least my argument as a lawyer trying to sue you. So if you have that LLC and you don't have membership certificates, you don't have an operating agreement, you did it online, you did it on the cheap, and now you're 7 years into this mess, you know who I'm talking to. then it's probably time that you actually sit down, spend some tax deductible money, and get your LLC cleaned up and in position, because it's a lot easier to get things done now when there's not a fire. And I mean, when you are served with a lawsuit, than a time when you just got time to plan. I mean, that's the thing. Be proactive, because what is your plan? Are you going to still wing it, or are you going to treat this as a valid business operation? So again, you know who I'm talking to. You started the LLC. You never got it. You got the articles of organization, but you never did the membership certificates. You don't have an operating agreement. And you're just sort of winging it. And yeah, you're filing your taxes and you're doing that operation, but you've never really done any tax planning. And now, the business is semi-successful. You're generating some income, paying yourself well. Well, let's start paying yourself first. And that's when the retirement planning piece comes in. Let's take some dollars off the top, not pay tax on it. Would a simple IRA or a SEP IRA or an individual 401k make the most financial sense for you to A, plan for your retirement? That's number one. And number two, what level of contribution would you like to be able to make that a tax deductible contribution and not pay the Internal Revenue Service on those dollars? And that way you have those dollars compounding for your own personal, safe, and secure retirement. To start that conversation on establishing your plan, give our office a call at 404-250-9798. That number again, 404-250-9798. The other thing that we can do is, a listener here on the Professional Edge, we make an offer to you to get things started, to get your plan underway, and that is via the bundle. And that's where we combine your estate planning with your tax planning, with your overall portfolio review and analysis. And to get that offer, you have to go to emcthebundle.com. That is Echo Mary Charlie, thebundle.com. If you were to engage us separately for those, or not mention you want the bundle, then you're looking at somewhere in the price of $12,000 to $15,000. You'll be shocked by the value. Basically, it's an inflation crusher offer. And we've drastically reduced that for our listeners here on the Professional Edge, because, yeah, you could be listening to music, but no, you tune into the Professional Edge to learn some little nuggets of information. But again, information is just that, information. It doesn't benefit you unless you take action on it. So that's our incentive to you. Take action on what you're listening here on the Professional Edge and implement it for you and your family's personal benefit. Again, that website is emcthebundle.com. That is Echo Mary Charlie, thebundle.com. I appreciate you listening to the Professional Edge. More coming up.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice, where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial financial security. You can reach estate management counselors and speak with Seen Todd by calling 1-877-654-9798. That's 1-877-654-9798.